Is the IRS dragnetting everybody in the entire world? This and more in today's episode. Welcome back to the channel. Do be sure that you smash those buttons, click them all, and make sure that you have the bell icon in full notification mode. Guys, today's Fear and Greed Index is no joke, 33. We're moving towards neutrality, but do you believe it? Do I believe it? Should we believe it? I don't know. Here is the current breakdown. Last month, we've lived in relative uncertainty, definitely leaning towards fear. Let's zoom out just a little bit back to 3 months. Remember, 3 months ago, we were in extreme greed. Score of 84, all the way down to most recently, 20, as of just yesterday, in extreme fear. So that massive flip-flop in the course of just 1 quarter, I don't believe that we're going to have such a parabolic rise back up into high pricing or into high greed. Now, I could be wrong, but as you know, I view this as a counter indicator, so I'm always a little bit worried about the direction that it's headed. That said, everything that you see on this show is considered my opinion. It's for entertainment and educational purposes. It's not meant to be taken as legal, investment, or business advice, or any other kind of advice. You need to do your own research. However, this is kind of commonly viewed as something of a counter indicator by many people. So when the market is feeling fearful, it's time to make plans for purchases and a return to greed. And when people are feeling overly greedy or definitely euphoric, it's probably a good time to just step away from things and figure out what your exit strategy is, figure out whether or not you should take profits, and then prepare a moon bag for maybe an eventual move up, but also protect yourself by taking out your initial investments. This is a pretty common strategy, worked for a lot of people. Taking profits and being cautious has worked out well for a lot of the most consistent traders who I know, and most consistent investors in the space who I know. But why is it so what do we have the score that we have right now? Why are we in fear? Why are we coming from fear? Let's take a look at, first off, the charts. And you see that movement kind of reflects what's been happening with Bitcoin's price recently. We're on TradingView. This is a publicly listed chart. You can see it down in the description of this video. These are the channels that were originally identified by CTO Larson. I definitely appreciate that it was laid out that way. But this channel, I think we're still kind of destined to continue living in this channel. We came really close to snapping up exactly, like to the day, the descending triangle that the chopsticks indicated. In fact, I mean, there we are, snapping right at the very tip of that wick upwards on the daily. This is a 1-day chart, by the way. It's all I feel comfortable looking at. I don't have the technical analysis chops to be able to show you anything more granular or use many other tools. We do have the moving average, convergence, divergence down below. So we do see that the MACD has flipped into bullish territory with that histogram kind of printing higher and higher divergence away from the most recent crossover point in the MACD. But we've wicked above, or we've gotten a candlestick all the way above the $40,000 mark. We hit 42, and it looks like, I mean, that little axe handle right there, it looks like we may be flipping back into red candle days. I'm not going to call anything there. I mean, it's not what I do, not my job, I don't think. But it's been quite a while since we've seen these upper ranges. And I think anything in this green area is still, I mean, I really do believe that it's reasonable dollar cost average territory. Going into yellow, I mean, your mileage may vary. People may be concerned about that. But I mentioned that in the green, my money would be going into Bitcoin. My fiat might be going into Bitcoin during these ranges. You do what you think is best. But I felt really comfortable with this as kind of a value buy for Bitcoin. Do we dip down below this in the future? Yeah, possibly. I don't know. I mean, I'm not gonna say no. We're still in the middle of, you see this move, these heavier bounces downward, and this could just be another heavier bounce down. But it's going to take a little bit of time to return back to these dollar cost average points that I've indicated before. Were something that I was interested in and doing. So I'm not overly worried about it. But you tell me in the comment section, what is your outlook on Bitcoin, and do you see the obvious correlation between the fear and greed? Kind of going back into, go for 1 week view here, kind of going back into an upswing versus that chart. Seems pretty obvious to me, right? There's roughly 7 days of that chart. Looks pretty similar, right? Kind of similar wave. But you tell me what you think in the comments section. I'm going to update that. So that's live when you take a look at it. But here's some of the news that's affecting the fear and greed. This one coming out of Cointelegraph, but it says, does the IMF have a hidden script for El Salvador's Bitcoin play? Meaning, is the IMF preparing for things to go badly in El Salvador or for things to go well in El Salvador? And they go over some potential motives for the IMF pulling its support for El Salvador and publicly warning El Salvador that it may not be able to support the country's move into Bitcoin as a legal form of tender. And I think that this is spot on. Absolutely, there is a plan on the IMF's part, either way, for whichever way it goes. The adoption rate is huge in El Salvador. They're definitely no longer interested in maintaining any kind of a tie to the US dollar or remaining a primarily US dollarized country. They haven't completely outlawed the US dollar. They're not going to do anything like that anytime soon. But I think the IMF is preparing for a move in either direction, as so much of the adoption in El Salvador is undeniable now. Not even the FUD machine can suppress it. Definitely people are interested in having something that has greater strength in the midst of a potential global financial downturn against the US dollar. Bitcoin fits the bill. So you tell me what you think of that. Is the IMF's place to be the world financial police, the world monetary police? I don't think so, but you know what? I may be in a minority here. Tell me what you think. The SEC versus Ripple. There's an attorney breaking down the contents of 2 unsealed Ripple emails. This is juicy. We need to know what's happening in this case. It will set precedent in the future for other cryptocurrency firms and DAOs and companies that want to give value-added service to crypto holders. Now, am I a Ripple holder? No. Am I telling you to be a Ripple holder? No. Do I think that Ripple is the best crypto out there? No, I don't. But I do think that this case will be groundbreaking, and it's going to matter big time what happens to Ripple, because we don't want the SEC being overly aggressive with every single crypto industry and every single crypto company out there and crypto movement and project out there. Just like how we don't want patent trolls sitting on open source technology in the decentralized community. But check that out. I'm not going to go into detail on that. The one that I did want to talk about, though, was the IRS calling on Congress for stronger crypto disclosure rules following a New Hampshire theft. Apparently, there was a New Hampshire resident who was scammed out of $2.3 million, and that was enough to get Senator Hassan to call for help. I'm a little bit concerned about this as well. I also think this is not something that we want. Some of the details are that the IRS is trying to deal with money service businesses, right? That's their big problem, is that money service businesses hit the IRS's radar because they offer reporting of any kind of potential theft or any kind of potential tax evasion. And so the IRS leans on money service businesses pretty heavily in order to report anything that looks like it could be tax evasion or criminal activity. But enhancing KYC measures and then leaning on FinCEN. Just the Bank Secrecy Act and working with FinCEN to expand the scope of what the IRS can do and expanding the scope of KYC and the depth of KYC across every single crypto financial services provider or money service business. I think this could have a chilling effect on future innovation here in the United States. There's already been something of a chilling effect here in the United States when it comes to cryptocurrencies. It seems as though very, very few crypto companies are starting in the United States. They tend to be starting internationally, and in fact, they tend to be excluding U.S. citizens at this point because it's become so onerous to do business here. Now, I do feel sorry for the guy. I do. I feel very, very badly for this resident of New Hampshire who was scammed out of $2.3 million. Have you tried doing your own research? I mean, I know that sounds heartless, but I do think that when you're looking at 6 to 7 figures worth of investment capital, we do need better advisement. We do need better professionals in the space helping people like this and investors like this to place their money in a safer way. And it's worth the price of admission, right? Some kind of a management fee. This is what's been done by brokerages for many, many years in other asset categories. I think we need better people helping these investors. I don't think that we need tighter regulation chilling any future innovation. See the difference? I don't know, but maybe you view it differently. Tell me in the comments section yet again. Also, there is a taxpayer who refused an IRS refund recently for staking rewards. The IRS has clarified its position on its view of staking rewards in staked cryptos such as Tezos, and that describes this particular taxpayer. A guy by the name of Joshua Jarrett shared on Twitter that the IRS had offered him a full refund of about $3,700, $3,800 plus interest last December, but, quote, the IRS will also apparently not provide any assurances with respect to the sole issue that gave rise to this matter. The Tennessee gym owner and cryptocurrency investor paid tax on tokens he was rewarded by staking Tezos in 2019. He later petitioned for a refund on the grounds that the tokens were new property and should not be taxed as income until the tokens are sold. And this makes sense to most of us, that it would be taxed on capital gains, or bare minimum, if there were a sale of other cryptocurrencies that were purchased as an investment, that those would at least be taxed on capital gains, but then that staking income would be a lot like interest earned on other investments. It would be taxed as income. This makes sense to me. This makes sense to most rational people. But in May 2021, in a federal complaint, he said he didn't receive a response from the IRS and was forced to sue the IRS. The case is expected to go to court in March of 2023. Good Lord. 4 years to get justice for this poor guy. Josh, my heart is with you. I mean, really, if this does hit Josh Jarrett's radar, I think that this is a very common sense approach that you have. And if the IRS does pick on taxpayers, well, I guess on the one hand, it's fortunate that there is that legal recourse to be able to sue the IRS. Many people do sue the IRS every single year. For the benefit of our audience, again, is this legal, financial, or business advice? Nope, it is none of those things. However, it is important for people to acknowledge and know that the IRS can be sued, and it can be sued successfully. There are many, many cases that serve as precedent to show that the IRS can be sued successfully for damages. And it works, especially when people become the subject of onerous, repetitive audits. You know, to make it seem as though the IRS is targeting them. We need to get the crypto industry and the crypto community mobilized in more of this motion, in my opinion. I think we need to see more of this stuff, where we see people very bravely stepping up to tell the IRS to back off. It's not the IRS's place to always make crypto holders pay extra or pay the highest amount. That's just too much. It just costs too much to be a successful crypto person in the United States. So IRS, if you keep doing this and you keep on getting sued enough by people who are tired of it, maybe you'll get the message that people want to succeed by living in the United States. They don't want to continue to fail and be taxed higher than they would even in some of the Nordic countries, when you consider income tax and capital gains tax and sales tax and convenience tax, food tax, fuel tax, essentially a tax on movement, tax on death, a tax on estates. Everything is taxed. In the final analysis, an individual who lives in the United States, a citizen of the United States, winds up paying more taxes throughout their life across all of these different categories. That's off of the cost of a single dollar, right? They wind up paying more taxes throughout their entire life than, in some cases, the Nordic countries that are offering socialized services, right? Better social programs and better outcomes for their citizens. I know it seems incredible, but we'll run the numbers on that another time. Anyway, guys, I'm going on a little bit of a rant here. Again, my heart goes out to Mr. Jarrett. I hope that this goes his way. Let's take a look, though, at the rest of our crypto market breakdown. We got DApp Radar. This is something I'm going to add to our lineup for future installments of the mining market signal. And ladies and gentlemen, my apologies that I'm not going to be able to put your comments up on screen this time. I am, you notice, though, in the chat there to talk with you. So please do interact with me. I'm unable to go live from this laptop. I'm not sure what's happening, actually. My streaming setup has been a little bit borked here. I've been able to record media, but I have not been able to stream media. So please forgive me. I will fix that very, very soon, but it's been a process of discovery with this new system that I intend to bring with me mobile as we go international and as I travel a bit more in the coming months. I'm trying to prepare in advance so that I'm not caught just doing streams from my phone like I was doing in Miami last time. So thanks for bearing with me. But Want to have DApp Radar on the listings there. We can go straight to our rankings. This is the biggest thing I think matters, right? Top blockchain DApps. And we can just filter according to some of the things that are most important to us. I'm looking forward to having this be a more regular part of the show. But I'd like you to tell me in the comment section of this show, which areas would you like me to compare? We've got all kinds of different categories. We've got all kinds of different platforms, and we've got all kinds of different filters, right? So I think we're going to leave the filters alone for right now. And I think for the categories, what I'd like to stick with for the moment is DeFi. So for DeFi, we've got PancakeSwap at the highest balance. I think that's our primary consideration right now. I think we refilter for balance at this point. Nope, actually it is the ETH2 deposit contract, which is kind of a sad state of affairs in a lot of ways. But, you know, it shows that there's high confidence in Ethereum. I think that is important to just note. $28 billion in that deposit contract. That's more than the market cap of some of the other layer 2s and other sovereign layer 1s. It's a pretty big deal. Curve, of course, in a relatively distant number 2. And then as you see it, the rest. Polygon, POS Bridge, though, in the top 5. You've heard me talk about it. I don't think I need to apologize for that. I think that I do need to just continue to tell you that I am something of a Polygon believer now. So you're going to keep on hearing this from me. We're going to talk about this. And if you have a different opinion, fine, go ahead and offer it. But I think you're going to have to really work hard to convince me. See, user count we can also sort and filter by. But you let me know what you want to see in upcoming episodes, and we will go there. DeFi Llama. This is going to give us a breakdown of our dominance for different chains. Let me go first off to chains over here. See the total value locked across all DeFi platforms. But for right now, I think what is important is the Ethereum dominance for the DeFi market. And it's holding at 61%, almost 62%. I thought the trend was going to continue. We would be heading towards 60%. Nope. It did dip into that area for a short time, actually 58%. So dipping below 60% market dominance. But Ethereum is holding strong. It's absolutely holding its own. By way of market cap, right? So stacked ranking in terms of market cap. It looks like, pop that text size up a little bit higher for you yet again. Old eyes over here, so I'm take for granted that you may also prefer to have bigger text. Ethereum, of course, is in the number 1 spot. Protocols are 516. It continues to grow, but Terra is still in that number 2 spot based on TVL, and BSC now in number 3. It's been displaced by Terra for a while. This has been the case. Even though the protocol support on Terra is quite low, UST and the fact that Terra works within the IBC ecosystem is what holds it there. We're going to talk about this more in detail in future videos, but let me just kind of summarize it this way. The IBC ecosystem, or the IBC gang as it's called, is a bunch of Cosmos and Tendermint-based protocols that can talk to each other. They were built with inter-blockchain communication as a primitive on those platforms, meaning it's a native function of these blockchains that can talk to each other. There is no bridge needed. There's no third party needed. There's no trust needed between them. None at all. It's simply a function of those blockchains that can operate in a sovereign fashion, but they can communicate and they can perform essentially seamless atomic swaps with no problem at all. And Terra is part of that ecosystem, meaning that realistically, we probably should be seeing something in this breakdown, in this lineup, should be seeing something that rather than just being listed as, say, like as Cosmos, wherever they have it in the stacked ranking here. Let's see. Osmosis should also be there. I'm not even seeing exactly where they have Cosmos lined up here. But various other similar IBC blockchains and networks really should be a little higher. Cosmos Hub should obviously be there. Yeah, I don't know that I'm fully believing this breakdown anymore. But Terra, at least has its own blockchain, higher in the rankings than BSC, Avalanche, and Phantom, Solana, despite the recent bridge hack, and then Polygon in the number 7 spot, Tron, Kronos, and Polkadot in number 10. Again, I'm surprised to see Polkadot in number 10. It's good to see that it's coming up, but I don't know how much I believe that. I love that there is an EVM and non-EVM breakdown. Let's go ahead and hit that EVM breakdown. I love seeing that it is that way. And in the EVM breakdown, of course, Ethereum is in that 72% range. It definitely dominates there. Polygon is in number 5. Top 5 are BSC, Avalanche, and Phantom, as you would expect. Let's go to non-EVM only, though. Man, I love that breakdown. And then it's Terra's game, right? So at 43% dominance for anything that is not Ethereum or Ethereum style, Terra, Solana, Tron, Osmosis, and Waves. Waves is killing it right now. But that's our TVL across all the DeFi chains. Let's go over to GPU profitability. And top of the list, we've got the GeForce RTX 3090. And it's way back in the money, over $7 right now. It's the last 24 hours. Unfortunately, we're not able to go through any other time frame from this view. Let me go back over to our typical cost per kilowatt hour of 14 cents. This is a much better indication or a much better estimate based on national averages here in the United States, but it's still just below $7, which is far higher than it was the last time that we went live. Now, apparently the current network conditions are not being measured correctly. There you go. So there's been a difficulty spike or block reward drop. But I think that more recently there's been a difficulty spike and there's been a block reward spike. So profits looked like they were extremely high, maybe even unreasonably high, for a short period of time. But you tell me in the comments, what's been your experience right now mining Ethereum? Top of the list is that 3090. Then we got the A5000 and Radeon 7. Typical stacked ranking as far as profitability. And it looks like the coins that are most profitable to mine are Ethereum all day. But then Mimic, Octopus, or Conflux, Ethereum Classic, and then a few others. Looks like, nope, you got a lot of Conflux and a lot of Ethereum and Ethereum Classic. Toncoin is back on the menu as well. It's in the profit, but clearly not as much as Ethereum for most coins or for most card profiles. Ryo Currency. Let's see if there are any other unfamiliar names. Nope, Firo on the list, still profitable. Ryo, Ethereum Classic, Conflux, Toncoin. Oh, and Ycash. There it is, like a bad penny, turning up again for the GTX 1080. Hilarious. Firo. What else we got here? Ycash again. And then Tube showing up for some lower spec cards, the 1070, the 1060, and then Equilibria. Looks like we've also got Beam and Ergo showing up in our Team Red cards. Most of the 4 GB cards on the Polaris edition, which profitability is, let's just face it, it's pretty low. At this point, we're looking at about a quarter per day per card on these lower spec cards, and even the R9 380, it's totally negative at this point. I've mentioned it for some time that if you do happen to have one of these, you should probably have it moved along. Looks like really the bottom of the line, this is hilarious. An RTX 3050 card. It looks like, however, their little asterisk call out there. Let's see exactly what it is they're trying to say with the asterisk call out. Limited unverified results. So could just be that there's bad data on that RTX 3050. Godspeed to any of our reviewers on YouTube that are trying to get those numbers out to the community. You guys are doing phenomenal service for the community, so much appreciated. For those of you who went out of your way to go wait in line and pick some of these up when they were brand new. Really awesome. So 1066 gig, though, even an ancient card like the 1066 gig doing $1.27 per day, and even the older Polaris 8 gig cards are doing almost $1.50 per day or $1.70 per day on Ethereum if these profits hold up. So good luck to anybody who's mining Ethereum right now. Are there other coins you can mine? Definitely, obviously there are, but Ethereum at the end of the day is just killing it. And with that DeFi dominance, there's no reason in my mind to switch anytime soon. Let's check the cost to mine one full Bitcoin. And let's use as a baseline standard, we will go with the 14 terahash per second at, I guess not quite 1300 watts. We're going to call it 1600 watts as our baseline standard, basically mimicking the Antminer S9, right? The old standby Antminer S9. And at 5 cent power right now, you're producing one full Bitcoin at $29,000. However, if we use our typical standard of 14 cents per kilowatt hour, you are currently at $81,000. Not a great way to acquire your Bitcoin today. Your break-even electricity price is, as it says right here, 7.2 cents. And that's going to be difficult for most people to find. You've heard me say for some time that 8 cents per kilowatt hour is something you can source in almost any major city. throughout the United States anyway. Get outside of the United States and it's much more difficult. Yeah, your all bets are off when you're in countries like Germany, for example, and others that have subsidized costs for power or have a specific, rather, power program that with specific sort of rate fixing across the country. But yeah, 8 cents per kilowatt hour, I think, is not even going to do it here. It seems pretty obvious. It's not. So unless you are at 5 cents, which even at that, I don't know, man. I think for my comfort, I'd want to be on like 3-cent power if I were on S9s. Good luck with that in the United States. I don't see it happening for most people. Oh, hey, look at this. Oh, I forgot we could just grab a model that we like. Mine or S9. What else we got here? All right. Entirely S9. That's funny. No S19. Let's go ahead and just for kicks and giggles, let's go look for that 104 terahash S19J Pro at about 3,300 watts, we'll just call it. And we are looking at phenomenal return on investment there, phenomenal returns there. Still at 14 cents per kilowatt hour, you're in the money, and you've got a break-even price of over a quarter, over 25 cents per kilowatt hour. Get yourself on some 8 cent or below power for this bad boy, and I think you're in good shape. But moving on from our mining costs, let's go to GPU portfolio. Guys, this is where we really see what's going on in the markets. This is where we really understand what's happening. And just as a reminder, guys, do be subscribed. It does help. Click all the buttons. It does help this channel be discovered by YouTube. We may be making some massive changes in the near future. I will go live and talk to you face-to-face to go over those. But do be subscribed. It does help. All right, guys, GPU mineable coins. This is anything that you can pick up with a GPU, whether it's an NVIDIA or an AMD GPU, anything you can mine with a GPU. Flux and Ton token top the list. Safecoin is no longer GPU mineable, but it was once GPU mineable. So if you were mining it before, you have some now. Equilibria is also in the leaderboard on the top 5 here, but it's not by much. It is ahead of Ethereum, though. And Polygon is only here as a formality because you can be paid in wrapped Ethereum on Polygon, and you can swap to Polygon very, very inexpensively. It has not performed quite as well, though. Biggest losers in GPUs, Haven and BitTube. Haven is still down nearing the $2 price. It's up over the last 7 days, but that's not saying very much. It's been really suffering over the last couple of weeks or month or so. But if you're a believer in the Haven protocol roadmap, if you're a believer in their mission, maybe you view this as a buying opportunity. Not going to tell you what to do, but some people have really great faith in the Haven protocol and what it's going to do with algorithmic stables paired with Monero privacy. But you figure out what's best for you. That's our GPU mining portfolio. Hard drive mining portfolio, let's see what we got here. Storage is at number 1. It is still 20% up, but everything else is pretty much a loser outside of MadeSafe. Siacoin down 40%. Signum down 68%. Filecoin down 69%. Chia at below $80. I didn't think I'd see it, but it's 90% down from where it was previously. When we first put it into this portfolio, when everybody else said it was going to double from that point, well, here it is at 90% down. I do feel bad for them, but the market cap is holding strong, and the cash fundraise early on when they first sold, the developers first got VC money, the cash fundraise of $60 million, I think that treasury is still intact. So they may have something up their sleeve for later on. I'm not turning my back on Chia for sure. CPU, and especially now that it's been an underdog for so long, guys, I'm starting to get different feelings and thoughts on the matter. CPU mining portfolio, Raptorium is still in number 1, 13x up. Just amazing to see that as a profit margin, but it has been on a steady decline over the last 7 days. Epic Cash continues to rise, but those are the only two that are in the money. Monero is our biggest loser at 9 cents per coin. Moving from CPUs into ASIC mining portfolio, we've got the GMT token, which is not, strictly speaking, ASIC mineable, but Bitcoin is the only one in the money from when we first put this entry into the portfolio. That's right. Our May 26th entry is in the money again. However, if we do dip below that range, as indicated before, we could see a problem with that profitability if we get back into this range. I mean, it's just not been a really great long-term hold right now, our Bitcoin, which, I mean, is unfortunate. Long-term, I'm sorry, I mean mid-term and short-term. Please don't misunderstand. Long-term, nothing outperforms Bitcoin in terms of stability and market cap. Nothing has. And I suspect that nothing's going to flip it in the near future either. But yeah, it's not been performing as well as we'd hoped. FPGA mining portfolio, if you had anything like a BlackMiner F1 or something along those lines, you'd be doing best on Cadena. 0x Bitcoin also mineable on some of, I believe, the BlackMiner offerings. It's been in the money as well. And of course, has its extreme volatility, right? Extreme oscillation in that pattern right there. See that massive, really, really high frequency swing that happens every single, I don't know, about hour or two. That's been consistently happening for months. We've been tracking it here on the show, but it looks like there's plenty of people who are making money with 0x Bitcoin. Hopefully, if that's something that you're interested in, hopefully you're one of those people. Biggest loser, Digibyte. I'm going to jump back into ASIC mining coins so we can take a look at our biggest loser there. Looks like Pirate Chain is way down to 80 cents. So back to, I think, almost its all-time low of 79. It may have gone lower. Yep, looks like it did hit all-time low this week, last couple of days. It's a bummer. There are some people who are strong believers, and I hope for their sake it recovers. But $154 million market cap, I think it's probably in good shape. But, you know, you do you. Some people love this project. Others don't care. I'm not going to offer a strong opinion either way. You take a look at it. Maybe it's fundamentally for you, though. Bitcoin, I do have strong feelings about. It has been proven to be, at least initially, have a massive controversy surrounding its launch and its fake history. But yeah, that's a bit of an issue there. Other big losers, default is highly, what's the word I'm saying? Highly depressed in terms of market cap at just $250,000. Dogecoin down to 14 cents, but showing good resilience too. That's our ASIC mining portfolio, guys. Going over this proof of stake smart contracts. This is where we have a bit of overlap with a new portfolio that I'm just creating today. Can't wait to show that to you guys. But Terra is our number one. It's up significantly. Phantom, Avalanche, Solana, and Wax. Those are our top 5. And then in 6th place, the little network that could, Cosmos. It's kind of pushed ahead of some others, such as Harmony and Binance Coin, and even Polkadot was ahead of it before. But Cosmos is coming up. I've told you to watch out for it, and here it is. Even when others were losing their shirts, Cosmos has pretty consistently kept its head above water with the price close to $30 per coin. In terms of retail perceptions, guys, and unit bias, people are going to be looking for a coin that they feel is affordable, and that $30 per coin mark, I think, definitely fits the bill. Cosmos is a great buy, I think, for a lot of people, even still at $30. Is this advice? No, it's just my opinion. I think it may still be a good buy at $30. And I think there's quite a bit of growth ahead of Cosmos. So we would be wise to keep our eyes on Cosmos. Biggest loser in this category, ICP. I don't care what anybody else is telling you about a comeback story, and the fact that it has a $4 billion market cap is just not enough for me. In fact, let's go ahead and let's arrange by market cap everything that's in this category. And I mean, it's pretty high on the list, actually. So it's much higher than before, obviously. It's ahead of EOS, which launched with a $4 billion raise. It's ahead of Harmony. It's ahead of Kusama, which even though Polkadot has a much higher market cap, Kusama is still behind Internet Computer, Wax, which has really clearly carved out a name for itself. Plenty of projects that are behind ICP in market cap. So just to be clear, that's not what we're talking about. What we're talking about is let's go ahead and sort by 7-day also. We're talking about the gains, right? Our profit and loss in a given portfolio based on the time that we acquired a given token. And Internet Computers just dumped since that time, 84% down. Let's see the last 7 days, though. This is where maybe I'm a little bit interested. Solana, recovering from that massive problem, just regained all the ground that it lost. I'm a little bit surprised by that. Tokamak Network, Wax, Ethereum, plenty of renewed interest in these projects that many people believe, in some cases, are oversold. But I don't know. Maybe these are VCs digging their heels in. Maybe these are market makers deciding that these projects don't get to fail right now. I'm not, I don't know. And I can't pretend to know exactly. But I do see that they are showing some resilience. I suspect, though, in the case of a couple of these projects, that these are some VCs and some investors that are just being obstinate and saying, nope, we're not going down without a fight. But you tell me what you think down in the comment section, guys. Is it manipulation? Is this organic market movement? What's happening there? Junk Drawer, what do you got for us? Junk Drawer shows a Saitama Inu is still in the #1 spot, which is crazy, I know. But again, it's based on a time of acquisition. And it's still at over $500,000 profit based on the initial $1,000 back in the end of May 2021. So if you did hold on to Saitama, if you were that lucky person in the audience, first off, I did tell you to take profits when it was up at $1.5 million in profit, right? I did say that, right? You could at least take out your initial then, take that $1,000 out. You'd be safe. But if you had divested about half of it, you would still have, gosh, roughly $250,000 in profit, or $250,000 worth of coins by just letting that moonbag ride. But you'd also have divested about $750,000 and been able to capture that profit. So you'd have a cool $1 million in holdings by taking 50% out at its previous all-time high when we talked about it on this show. Just want to make that very, very clear. I'm not referring to like some hypothetical that we didn't see coming. I'm talking about something that we were actively tracking and that I actively discussed with you, right? For your entertainment and education, I told you, hey, look, this looks like a local top. This might be a good time to consider taking profits. And I think that's been validated at this point. So just saying, even with the meme coins like Saitama Inu, if you happen to have some, just know when it's, know when to hold them, know when to fold them, like the old Kenny Rogers song, right? It's like just try to be smart about when you take profits and the fact that you take profits. Don't let it ride until you're underwater. Floki, UFO, Luffy, Doge on Mars, Zio Network, and then Hex. Where is Hex? 21 cents. Remember I mentioned that if you bought Hex below 12 cents, it would have been a great buy. We just have not tested. We have not been able to test anything lower than 12 cents. And it's been pretty awesome to see that. So if you bought below 12 cents, good for you. If you bought earlier, good for you. You'd be way farther up ahead. But this current number of gains, I think, just double check to make sure that I understand what our liquid gains are in Hex there. Because I realize there's going to be a hexagon that shows up and says, wait, you're measuring this wrong. You don't measure Hex by liquid gains, or by like, or by how many gains you got by holding liquid Hex. Look, I got it, man. I get it. Stop. I'm just trying to make a point here. So back in, hey now, what the? Wow, I guess this portfolio has been going for a while, huh? I didn't really think about that. We have been tracking this portfolio for quite some time. But if we're looking back at May 26th. All right, we're looking at an acquisition price of 5 cents. Could be, 5 cents, 5.5 cents. So yeah, back at that time, your portfolio is doing just fine. It has not gone back down since that point. Of course, it did reach a fever pitch at earlier on. Buying way back here, right? Sub penny makes a heck of a lot more sense. But we're tracking everything on equal footing, right? So that nothing has an unfair advantage against other sides of the portfolio. So yeah, there's Hex in those conditions, in that context, even ahead of Shiba Inu, right? Everybody says, oh, you don't get it. Shiba Inu is amazing. It's going to the moon. Well, here we are looking at Hex doing better. And this is me saying, guys, you got to believe in me. It makes sense. As part of a well-rounded portfolio, I am starting to say, like, okay, Hex makes sense. It's carved out a place for itself. Clearly, in the last roughly year, it's carved out a place for itself as even just a conservative entry into somebody's portfolio to anticipate some sort of typical yield from holding the liquid asset itself. However, apparently the value proposition of Hex is higher than that. We'll talk about that another time, guys. Don't want to come across as a maxi. Just say it's earned a spot in the portfolio here for a reason. But biggest loser in this category is now Bone. Sorry, Bone. Shiba Swap, not doing so hot. Quick Swap is down significantly, and then so is Dragon's Quick. It's a bummer. Hope that we see some recovery there. Hopefully we see some additional news coming out of it. But there was some pretty great news that I saw coming out of QuickSwap the last couple of days, and that is that they brought on Celsius X. So if you're not familiar with Celsius X, we're going to have to take a look at that. Maybe we'll even just go ahead and add Celsius to this junk drawer, because it just it's one of those things that I'm not really sure how else to categorize, right? Like it kind of would just have to go into the junk drawer. So before I let you go, let's take a look at, we've got another side of the portfolio to cover, but let's add an entry to Celsius Network here. Going to jump back in time, take a look at the Celsius price on the 26th of May, 2021. And we're going to define that by having the out point of our look back as the 27th. So now we've got, let's see, 26th at about, there we go, 5:18 p.m. So 5:18 p.m. it was $6.80. Let's take a look. Oof. $6.80 looks like, yeah, we're going to be down by just a little bit. So let me grab a calculator and I'm going to divide 1,000 by $6.80. Looks like we've got 147 coins, would give us roughly our, well, 0.05. Oh my gosh. There we go. Got $1,000. Took a little bit more time than I thought, but got about $1,000 of value from that purchase, $1,000 equivalent purchase, and go to 5:19 p.m. Cool. So we got that in the portfolio now, and it looks like even still, there we go. Celsius is still just below Uniswap in terms of its current value and holding in that same time frame. Guys, this is meant to be something that helps give us some perspective, so just so you know. But here it is, IBC Gang. The IBC Gang, what is the IBC Gang? I've been talking about it this entire episode, guys. It is everything that lives in the interblockchain communication protocol, things that can talk to each other by virtue of the chain that they're built on, the tech that they're built on. And guess what? It includes Cadena and Terra. Yep. As well as UST. I could talk about that as well. Kind of a silly thing to put in a portfolio, though, because it's meant to be a stable coin, so it's going to stay equivalent to $1. But just know that it's part of this ecosystem, the UST stablecoin. But Terra, Secret, Cosmos, Osmosis, and Comdex, if you haven't heard of this little gem, we may talk about that in the future. Not sure if I have time to expand on it now, but Certic, Sentinel, that does the decentralized VPN or DVPN, Regen, Akash Network, Thor, and Persistence. There are more as well. Tell me which of the IBC protocol projects you want me to add. Tell me in the comments. Leave a comment. I need to know what from the IBC Gang needs to go into this larger portfolio. This all respects the same entry point, a purchase back on May 26th of 2021, as the rest of our portfolio here on the Mine Your Biz portfolio segment. And we can kind of see, over time, how this portfolio has done. We can take a look at different interpretations of this data and try to figure out like how well has this portfolio performed versus grabbing a couple of just key fundamental projects and hodling. Some people talk very strongly about just dollar cost averaging into Bitcoin and letting that be the only investment that anybody does. Now, again, this is not a channel where I actually give advice, but I just don't know that I agree with that advice. Anyway, we've gone on our typical running length, guys. Do give me a comment down below as to what you think we should do here in this new IBC portfolio. Should we add something new? Tell me what you think we should add down in the comment section. And of course, leave a comment about today's main event, the IRS news segments. Guys, I definitely appreciate you being subscribed, clicking all the buttons, smashing like, smashing the bell, making sure notifications are double checked so they're turned on. You're the reason I make this media, guys. I love you. See you in the next one. Thanks for watching all the way to the end of the video. Be sure to like and subscribe, and then check out mineyour.biz to sign up for Mine Your Biz Insiders, our exclusive newsletter where we talk about all kinds of mining deals, crypto-oriented deals, security deals, privacy deals, and everything that we can't personally bring you here on the channel, but can talk to you about in email. Also, check out our swag shop where you can see the Mine Your Biz phone. You can also see dedicated sites for Bitcoin, Monero, and other meme coin swag, as well as our friends over at Flux Network. All right, guys, thanks for watching to the end. You know I love your face. Remember to stay private and mind your biz.